7%. We have also liquidated inventories, which we added in the last quarter. So 300,000 tons of inventories we liquidated in a traditionally weak quarter. On your query on the price, I think in the quarter one, we had indicated that prices did fall in the domestic international markets, and impact of that did flow into quarter two. However, it was offset by some improvement in prices in August and September in India, as well as a lower coking coal price, which we had in quarter two. We had a fall of about roughly $54 in the coking coal prices in quarter two.
Okay, all right. So coking coal cost then effectively for the past quarter was something in the vicinity of around $230?
Yes.
Okay. So the path ahead then, for quarter three, do you see a further drop in coking coal costs? Because you would have bought coking coal at a price that was low as well, so you could get some bit more for benefit. And from quarter four onwards, do you see that cost benefit catch up? That's on coking coal side. And price increases have come about, so how does it compare? Average realization today in comparison to average realization for second quarter, how much higher?
So let me put it this way. Prices which had gone up in the Indian domestic market between August and September will flow into the October-December quarter. Coking coal prices increased substantially during the last 2 months, and that would also flow into the October-December quarter. However, we expect that by and large, we should be able to offset the increase in coking coal prices with the price benefit which we had in the last 2 months, and some increase in the month of October. Coking coal prices, I think on an absolute number, may go up by $25 to $30 per ton.
Okay, all right. That for the third quarter, that is?
For quarter three. Part of that will also flow into quarter four, but yeah, for quarter three, $25 to $30 more.
Okay, all right. But the price increases could offset some part of that. So, Mr. Acharya, give us a sense about the India EBITDA per ton, because that's looking rather good. We haven't seen this number from 12,750 rupees per ton in the last few quarters. Will EBITDA be directionally better from here for the third and the fourth quarter, given that volumes pick up, you're getting out of a seasonally weak quarter as well, and pricing as well is on your side?
Yeah, so I think over the last few years, we have put in some initiatives which are playing out now, whether it's cost savings, value addition, better efficiencies. Those have yielded results. So over the last 3 quarters, if you notice, our EBITDA per ton has been very consistent. We expect our numbers to be, I would say, directionally, I wouldn't say better, but it will be range bound. We have the headwinds of global, but however, India under this backdrop continues to do extremely well. Strong domestic momentum driven by a very good spend on infrastructure building by the government of India, manufacturing doing quite well, consumption doing particularly quite well. So I think we have the levers available for the H2 as a whole, and seasonally, this is a better period. So we should see a decent growth in terms of volume, which would play into EBITDA on an absolute number basis.
So EBITDA per ton for India business around current levels?
Difficult to put a number on EBITDA per ton, but because our capacities are going up in BPSL, we would add our phase 2 of expansion, which will come on stream. So aided by that, an improvement in some of our existing operations, because there were some shutdowns in the last quarter, I think we should do better in terms of absolute volume term, and that would give us some better EBITDA on an absolute number basis.
Okay, all right. Absolute number is what you're looking at. But the overseas business, that's been a little disappointing, Mr. Acharya. If I look at the US business, the Europe business as well, it had an off quarter, maybe something to do with regard to a seasonal aspect played out there. But we were getting used to that 500, 550 crores, 600 approximately in that vicinity, 5 to 600 crores of EBITDA, which hasn't happened this time. It's less than 100 crores. What's the quarterly run rate we should look at for overseas business EBITDA per quarter?
So in the US operations, Baytown did better. Baytown, which is the plate of the pipe mill, has done better. In Ohio, we had headwinds. The market were not supportive. The prices in the international market, as you are aware, had fallen. So that impacted both volume and the margins. So we had a difficult quarter in Ohio. Going forward into this quarter, I would say that Baytown will continue to be stable. However, Ohio will see some headwinds again. December is a shorter month. The market demand, while it has improved somewhat, the pricing has also improved somewhat, may still not be good enough. So it will be a little better than Q2, but I still expect some headwinds to continue in Ohio. Italy, I think we had the decent numbers in terms of volume. However, there were some price corrections as per formulas and as per some orders already pre-booked. Going into the H2 for Q3 and Q4, we expect the rail mills to do better. So I think directionally we are fine. We feel Italy will continue to be range bound and will deliver decent results.
So overseas EBITDA will improve from here on at least?
Better than Q2.
Okay, yeah, I mean, looks quite, tepid in the past quarter. So improvement will be good. Give us a few more details. Net debt number is approaching 70,000 crores odd. You have capex underway as well. We understand that. And you're sticking to your capex plan. What do we end this year with in terms of the net debt number, Mr. Acharya? From 70,000 crores, will it head south?
So our current debt, which we are closing the quarter with, is just above 69,000 crores. And primarily, this has gone up on account of our JSW merger. Our capex is on track. We have spent close to 8,000 crores on capex, including our India and international capex. Our target has been in the vicinity of 20,000 crores. I think we will continue to monitor capex for key projects going forward, and will deliver, to see that those projects are not impacted. We are keeping a very close watch on debt. You would have seen our ratios. Net debt to EBITDA at 2.52 for the quarter has improved well from the 3.14 in the last quarter.
Yes.
Going forward, let me put it this way, that we expect our ratios to be similar to where we are in Q2.
Okay, all right. Final question, Mr. Acharya, then. NMDC Steel, that's supposed to be the prized asset, and a lot of big ferrous players were looking at it. Is it still on the block according to you or not? Because, there was, I think, a letter of interest that was sent out. A lot of people were interested in that asset, maybe at a particular price. But what's the latest from your end?
So we have given our expression of interest for NMDC as well. We are evaluating the numbers. I think the plant visits and related kind of diligence is going on. It will go on. We don't have any official notification of any change in thought. So I think directionally, we will do our diligence and see whether it makes strategic or economic fitment to look at it.
Okay, that's the word coming in from JSW Steel. Let's slip into a quick break. On that note, on the other side, Natarajan Srinivasan of CG Power and Industrial Solutions will join in to talk about their Q2 performance. Later, Arun Mishra of Hindustan Zinc will be with us to talk about their Q2 numbers. Stay tuned.